The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Thursday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the opening bell, and you got markets in negative territory. Quite the slide yesterday, extending those losses overnight. We were just approaching a 3,800 handle in the S&Ps, and that's after leaving the show yesterday, man, basically where the acceleration began. 10 o'clock in the morning, you're trading at about 4,030. Don't underestimate it, folks. You just traded down 125 S&P points since I talked to you last yesterday at 10 in the morning. Quite a remarkable acceleration. We've bounced about 12 points. We got some economic data this morning. But boy, check out that slide, right? Almost no reprieve until about 1 o'clock. That was a 3-hour slide to negative prices where you lost about, 70 points of that run. But since then, small pause at 1 p.m. Eastern Time, and right now you're down an additional 1% from where you were, let alone the indice, right now off about 0.7%. NASDAQ 100, all the indices trading lower, a little bit of a small bounce. We got jobless claims this morning, 190,000. We'll jump into that in a moment. We got Netflix earnings after the bell tonight. Dow, negative 223 points right now. You talk about a slide, man. Jumping back to where we were in the Dow, above 34,000. We left the program yesterday with about a 34,000 handle, and we almost came on the program today with a 32,000 handle, folks. Watch out. Bitcoin, there's no investment like Bitcoin right now, man. You talk about it. Bitcoin, positive today by $15. It had quite a slide yesterday as well, dropped about 1,000 to 1,200 bucks. But boy, first of all, a couple things. Number one, we've gotten back the entire FTX collapse in Bitcoin. Maybe there's nothing like Bitcoin. There's a flight to quality, right? The best quality in crypto. We're finding out, man. If I had said to you, November 1st, I explained to you what was going to happen with FTX. I explained to you it was going to be a Ponzi scheme. I explained to you there wasn't going to be that much more dramatic good information to come out, but there would be dominoes to fall in the whole industry. You'd have bankruptcies, collapses across the board. And I told you that Bitcoin by January 19th, middle of January, would actually be trading at a higher price. You probably wouldn't make that wager, folks, and that's where we are right now on Bitcoin. Ethereum, almost back above that price level, but getting it all back as well. 1524, flight to quality. Gold contract this morning, up by $10. Gold on quite a run lately. You're trading at about 1916 so far. Jump over to silver. Silver chopping around a bit. You're off 18 pennies right now. We jumped to notes and bonds. Quite the acceleration yesterday. Seeing a little bit of give back today, but man, that acceleration yesterday, you're talking about a move coming in early Wednesday where you jump, I think that was Bank of Japan action on Wednesday night at 9 o'clock. You got the first thrust, you got the second thrust. You traded up almost a point and a half, more than a point and a half, almost 2 full points. And if you back it up to early on Tuesday, you did trade up about two full points, folks. Almost made it by a couple ticks. That's a huge move in the 10-year in terms of higher price, lower yield, a little bit of a pullback today. There's a lot of optimism priced into this market in terms of a soft landing now. Keep that in mind because market expectations are everything sometimes. Since that price on Tuesday, you're talking about 4 full points on the 30-year to 132.31. You're backing off a bit. You're at a 131.21 handle. And you're talking about right now, to pull it up, the 10-year, we're dealing with the yield right now, 3.40%. The yield on the 10-year. And we were below that level briefly. We jump over to the VIX this morning. Little negative action in the market finally, and the VIX spikes right back up above 21.57. Take a look at this chart, folks. Be careful, because if this year is anything like last year, that's a bounce where we've been to lower territory on the VIX, and don't underestimate the pullbacks in this market, man. We got a Fed meeting coming up, right? What is Chairman Powell going to say? There's a lot of optimism about the chairman. I was listening to Bloomberg earlier this morning, and they're talking about 125 basis point hike, and we're done. Well, that's okay to want as a market participant, but boy, that is very optimistic for Chairman Powell. We'll leave it at that. One of the possible outcomes, folks, but keep in mind to go one and done in terms of a 25 basis point hike. And I say 25 is completely reasonable, but they just went 75 and then they go 50 and then they go 125. So their whole grind down is going to be 75 continually and then 50, 25 done. I'm not so sure they're going to be that quick to stop from the 75s. It's possible. They're going to get a ton of data in between that time frame, that's for sure. And they're really going to get, where I think it really gets interesting is the May meeting. And I'll pull up the calendar, okay, because there's such a lull. Let's see if we can find it right now. I'll find it at the break. Here we go. Yeah, so they go at the end of this month, okay, and then they go about 6 weeks until March 21st, 22nd. And then they go another 6-7 weeks almost to May 2nd. They meet every about 6 weeks. So you got to go all the way out to May. That is where potentially maybe you go 25 at the end of this month, maybe you go 25 in March, and maybe by May. And you're talking about, what, 3.5 months from where we are right now? The amount of data you get before that meeting. But March 21st, 22nd, to be done hiking at this point, I think we need to see a little bit more data in the markets. But guess what? That's what the volatility is about, folks. The market, very uneasy where we go from here and pulling back up. Let's just look at the last 10 days, right? Boy, quite a run, man. And where does this Fibonacci number go? You don't have to go back further. Let's see. What number is that one from? Yeah, that was just the acceleration we had from higher price. Let's take this one off. Let's zoom in on this and the run we've had recently. And let's just take a look at this acceleration from where we were on January 6th. And you're coming right back into the 618, which is about 39.02, and we just traded to 39.06 on the S&Ps. But boy, like they say, a stairway on the way up and an elevator on the way down, man. It takes us 12 days to go up that price point from 38.25, about 210 S&P points, and it takes us 1 day to give back 125 of those points. Pretty remarkable, man. Let's jump over to Netflix this morning. Netflix, they're out with their numbers. You talk about a run, 273 to 336. You jump over to the Analyze tab, and you're talking about $28 basically priced in for their numbers after the bell tonight. If you jump over to, you're talking about almost a $30 move priced in if you want to hold those options through tomorrow. Now, that's as of yesterday's close pricing. So there's some premium adjustment even just for the time value of holding those overnight. So that'll recalibrate on the open in about 16 minutes from right now. You take a little bit of a longer term look on Netflix. Quite a pop off the bottom. If you are playing this, I talked about it earlier in the week. Number one, you're about 100% off the bottom. Still, some percentages on small numbers can be deceiving, as I say. The 382 of that move gets you all the way up to 373. That's kind of an area that you chopped around in for the better part of the beginning of 2022. But the thing to keep in mind, especially as well, folks, since their last earnings, they came into their last earnings, okay, on October 13th, the acceleration began. You were at a price point of 211. You're up almost 50%. Now, those numbers actually came out on the 18th, so you got an acceleration higher. You came into those numbers potentially at 240. You're still trading at about 320, okay? That alone. So you're up between 35 to 50% since their last numbers. Built on optimism, folks, okay? So, yes, you're still cutting half more so from the 700, right? 350 gets you about a 50% cut. But keep in mind that you're up dramatically over the last 90 days. You're up dramatically over the last 60 days. 100% return over the last 60 days almost, generalizing, okay? And yeah, you're talking about 50 to 30%. Stay tuned, folks. We got a lot to talk about. We'll be right back after the break. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&Ps right now, negative by 27 points. Excuse me, that's still Netflix. Jumping back one more time. Down about 27 points right now. You're up off the lows of about 39.06, and that low came in at 8.30. So numbers, we'll kick things off with and quite a number. How does all this data interpret, right? Listening to another analyst certainly on Bloomberg this morning and saying that you go back and forth. It seems like one day, good news is good news. The second day, good news is bad news because it's so up in the air right now. The Fed's forward-looking policy. 4-week moving average declined to an 8-month low. The jobless claims are at an 8-month low. Continuing claims rose after falling in the 2 previous weeks, though. You take a look at where we are. Initial jobless claims, 4-week moving average. It's amazing that we're dropping to these levels, man. You got to go back to April of last year where the 4-week average was down at about 170. You see the run to 250. But since then, you talk about volatility, folks, okay? Yeah, can be particularly volatile and difficult to seasonally adjust. We're coming off holidays, of course, still. But yeah, nonetheless, 190,000. Quite the number. Okay, jumping to Amazon. I was like, what are we doing next? Amazon. This one's interesting, man. In terms of, you talk about cutting costs. They're cutting charities, okay? Amazon. Amazon spikes to $99.32 yesterday. Today, you're off with the market. Quite a slide yesterday where you slide about $4 down to $95 near the close. Looks like you're going to open down another $1.40. But if you weren't familiar with this one, folks, it was a great perk or just great way to spend money on Amazon is a better way to put it. If you spent money through their Amazon Smile website, a certain percentage of your purchase was donated to the charity of your choice. It was the same exact prices. Okay, they didn't promote it dramatically, but if you knew it, you just had to go to that website. It was just the same exact website as Amazon. Just a certain percentage of it for whatever reason. I don't even know why, right? And I always felt like it was like, oh, that they were, going to be donating money anyway as a corporate partner to X charities. What they then did was allow users to get value by directing where some of that money went by making their purchases through Amazon Smile. Well, they're really cutting, man, because they're discontinuing the charity donation program amid cost cuts. Amazon Smile, the company, had donated percentages of the purchases to the charity of the user's choice, and they're axing the program. As Jazzy's coming down with the axe and cutting costs, it had donated roughly $500 million to charities since the program launched in 2013. It's amazing. I would have thought it was much higher. Just as somebody that's used it, I know my dad's used it as well. I'm sure many people have used it, Amazon Smile. Why not? You know, if you're an Amazon regular and you became aware of that, why not? They're going to wind it down by February 20th. Pretty remarkable, right? That the whole Amazon charity program that's designed to let users donate money to the charity of their choice over the last 10 years has donated $500 million, and meanwhile Bezos is still worth $120 billion. So what is that? Less than 0.5% of his net worth over that time. Put in context. Taken out of Amazon, which is a company, to go full circle, a company that is valued at about $1 trillion. I don't know if it was just above or just below. You're talking about 10 billion shares. Yeah, they were almost at about $1 trillion yesterday on that number. They've hired quite a number of people over the last 2 or 3 years. You're dealing with $1 trillion market cap, and they're shutting down a program that's given away $500 million over the last 10 years. That's $50 million a year potentially is all you're talking about. It's going to charities, and they're axing it. As an Amazon shareholder long-term, folks, I think that's kind of garbage, to put it lightly, that they can't afford that type of expense, and that's where they're trimming things. $50 million a year going to donations. Either way, for what it's worth. It's important to know that stuff, because it's like, come on, man. You know, that's what you're going to pad your balance sheet with. That's not going to save the share price, folks, at all. Okay, speaking of share prices, Procter & Gamble, revenue and profit fall as the company looks to higher prices to offset declining sales. That's a tough one, man. They're selling less sales, so what are they going to do? They're just going to hike the price, man. You know, you sell the same amount of product, you sell less product at a higher price, you get the same exact revenue. They got falling revenue and profit as they're with their numbers. Higher prices struggle to offset, though, the declining sales volume. All of the company's divisions reported declining sales volume in the quarter. Folks, they sell everything. This is crazy. All right, I was reading this morning. I almost could have started off the show with this. They lifted the outlook for 2023 sales growth to 4 to 5%. But think about that. All of the company's divisions reported declining sales volume in the quarter. All of them. Earnings $1.59, revenue just above there. Net income $3.9 billion is the number for $1.59, down from 4.22. Net sales falling $20.77 billion. That's a decrease of 1% from the prior year. The analysts, though, were looking for a little bit even more of a slide, as in revenue, net sales 20.73. Organic revenue increased 5% during the fiscal second quarter. So check that out, right? A lot of that with foreign currency. If you exclude the impact of foreign currency, yeah, they increased 5%. That was a result of higher pricing, which outweighed shrinking consumer demand. Check that out, right? Talk about an inflation factor. Consumer demand is going down, so they just jack the prices up to make up for it. How does that make sense? Talk about a conundrum, to put it lightly. Yeah. Consumer demand is responsible for at least half of the 6% sales volume decrease. That's a demand problem, folks. The remaining was due to reining in business in Russia. So you got a 3% sales volume decrease for consumer demand. The other demand was talking about China and Russia. Yeah, they sell everything, man. I mean, how do they have declining sales if we have inflation running at 7% and they sell all the household goods and everything's going up? Sales. That's not profits, that's sales. A little bit of an ominous sign in terms of people being much more aware of the money they're spending on razors, laundry detergent, some of the most expensive stuff that you got to buy on the regular in terms of where Procter & Gamble is positioned. Okay, jumping around, what else we have as we come into the opening bell? We talked about jobless claims. Let's talk about housing starts, also out this morning. Fall to cap the first annual decline since 2009 is the number. New U.S. home construction declined for the fourth straight month in December. Residential starts decreased 1.4% last month to 1.38 million annualized rate. That's a 5-month low. New construction falling 3% in 2022 after surging the prior year. The December drop was due to a slump in multifamily projects. Single-family home building jumped to 909. That's the most since August. And however, for all of last year, about 1 million one-family houses were started, down 10.6% from 2021, the biggest drop since 2009. The median estimates were looking for 1.36 million pace. They came in at 1.38 million pace. So pretty much in line. It's interesting when you think about it, we got a housing problem, right? And it doesn't seem like this is going to help solve things, man. And the interrelationship between rents and mortgages and interest rates, and now home building pulling back at least a bit, right? At least compared to where we were in 2021, without putting it lightly. What time is it as we go forward? Perfect. We got about 30 seconds to the break. We got 3.5 minutes until the opening bell. Markets a little dicey this morning, folks. Coming down, S&P's down an additional 29 points after the slide yesterday. We have 3 minutes until the opening bell. We'll take a look at Netflix again for their earnings. We'll take a look at some of the other media companies. Disney. We'll be right back, folks.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and you get a little bit of a bounce on that opening bell. We're now just negative by 19 points. There's your S&P, up from a low of 39.06, coming in on that weekly jobless claims number. Interesting, right? That is good news, and good news was good news at 39.06, because if prices are abating and we're keeping weekly jobless claims at 190,000 and you get that slide, that is that soft landing. But boy, a lot of that priced into this market, I think, especially at yesterday above 4,000, still at 3,900, keeping in mind how quick that slide can be to 35 to 3,600 if that does not play out. Nobody knows what's going to happen with that data, folks, but we're still at some pretty lofty numbers, and the chairman is not going to pivot before he is sure. Be interesting to see when he stops raising. We have a long way until he cuts, but very interesting to see when they stop raising. That is a variable no one really knows besides the chairman and some of probably those that are on the Federal Reserve voting members themselves. Okay, jumping around, speaking about important topics. Davos, Mr. Diamond, said the government shouldn't play games with the debt ceiling. Listen, it's a bummer that this is political, folks, because when either party's in office, okay, how I feel, and this is market-wise for sure, is that I don't understand how either party would basically play kamikaze with paying our bills. The debt is insane. That's a conversation everybody should be willing to have and a no-brainer. But it's not like this is a theoretical debt that we owe to the Chinese and the Russians, folks. This is treasuries that, you and I own almost, that many retirees own across the board. So I don't understand how you play that game on either party when the money is already spent, the bills are incurred, and the debt is held by a worldwide society for sure, okay? But many Americans, we're the ones that hold that debt, man. You got any U.S. treasuries, you got any U.S. Treasury. You got those I-bonds? You got those I-bonds recently that were all the rage? That is the money that is out there, and this is something to pay it. Now, you look at these numbers, folks, okay? Yeah, here's the debt limit, okay? And you're talking about a run from, December of 2021, you're at 29, already you're above 31. Insanity, okay? Agreed. But I don't get how you negotiate, because usually when you negotiate, you have strong positions, weak positions. You have people who are willing to tell you what they're willing to do to get what they want, right? And it's a battle of those wants and needs, and who has a strong position to negotiate from and who has a weak position to negotiate from. And demanding something for a raise is literally saying that I am willing to not pay our bills and incur the wrath that does to get what I want. And either side saying that, folks, I'll say it, either side, okay? I don't understand how you argue that position. Arguing what you want, arguing that you should want those numbers to come down, I feel the same way, wanting many of these numbers to come down. I have a son who's about to be 2, okay? That's totally what I'm about, man. Now, getting into... So that's JP Morgan. That speaks for itself, okay? I don't understand how you do that. Yields go up. We want to be a junk debt society. You don't want to live in the U.S., folks, if we are in a junk debt society. I wish we didn't have debt, especially transfer it to the next generation. But if we don't start paying our bills, if we stop paying our bills, that goes where it goes. Now, getting into how this may play out as this comes down, this article is interesting over at Bloomberg this morning, saying McHenry is the Republican to watch. He's the chair of the House Financial Panel, and I'm sure there's going to be many out there. The one that was interesting is that, so they call him here an ally to McCarthy and a negotiator in a fractured party. He's the chair of that panel, and if you look to his words, okay, this is going to be interesting because it's such a tight house, man. Just last month, he said he preferred to keep spending issues apart from the debt ceiling, which would allow the U.S. government to make payments on debt that has already been incurred from previous spending deals. So that's going to be an important one, man. We saw how the battle went for Speaker. It's a very fractured house, as it is across the board on both parties sometimes. And when the majority is that thin, boy, it's going to be a tough one. And if the market starts reacting to that one, another risk to keep on your radar in a big way. And I think probably bigger than many are actually anticipating. And I don't know how you play, Russian roulette with the credit worthiness of our country. And again, it's not like we just declare bankruptcy and China and Russia are upset that we canceled our debt, okay? That they took a risk in giving us. This is debt that is held by many in our society, retirees, where do you think fixed income goes, folks? Where do you think all that, those I bonds that everybody loved? It's all part of that. So I don't understand the discussion of saying we'll just default on the debt. What if they just said we'll just default and we'll just default on the I bonds that we gave out over the last 2 years because that was too high of an interest rate? That's like part of the argument. They would just not pay our bills when many Americans are the people that lent that money and are asking for their interest payments back. Keep that in mind, man, because it's difficult to go forward in that conversation when that is one side of it that you just don't go forward to. All right, let's jump back to the markets right now as we get just some chop. We're sitting at 39.23. Let's jump around to Netflix. As I said, out with their numbers tomorrow. Netflix down 1.1%. And yeah, doesn't mean it can't trade higher. You're talking about a $30 move priced in for volatility on their numbers after the bell tonight. But a lot of optimism as you are up about 50% from where it was just 3 months ago and about 100% from where this thing was chopping around at the lows for the better part of the middle of last year as you chop around. Let's jump over to Disney. Disney shares. This thing's been chopping around here since last June, right? 98.30. You're up from $84. Iger back in charge, probably the best thing that could happen to that company as they transition probably to a new CEO over the next 2 years for Disney shares. Let's see how some of the currencies are trading this morning. We jump over to the dollar index. The trend continues, right? Check out the move yesterday. Trade lower to 101.52, back almost $1 this morning. You're down a little bit, down about 30 cents. We jump over to the gold contract. As you see the gold contract catching a little bit of a bid, we jump over to the dollar yen. Quite the move yesterday for the dollar yen, and we're sitting right where we were basically for yesterday's action, 128 and change right now. Quite the reversal from 131.50. You take a look at the daily on this thing, and I had a chart up yesterday, man, if you were watching the program. The 10-year yield in Japan, folks, it's sitting at like 0.1% or something. What they did yesterday is they stood pat at negative rates. The Bank of Japan keeping things at 0.1 negative. Negative 0.1% is their lending rate for their central bank, and eventually that's going to change. And the market is anticipating that because when you compare it to the global economy, man, now they're not dealing with the inflation that many other countries are, the U.S. included, but quite the price in as the market is forward-looking, even with negative interest rates. You're back to 128. The dollar, of course, having a lot to do with this as well. But when I was talking to our man Teddy Kegstad yesterday, he was talking about the divergent factors right now, whether you look at the euro, okay, euro-US dollar. We're at 108. You're not at highs on the euro-US dollar. Let's see how the pound's trading right now, because we were talking about the pound yesterday. Yeah, not quite over those highs just yet. It was yesterday. Pound, though, 123. Stay tuned, folks. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the S&P's down about 15 points right now. That's off of the lows of 39.06. You're up a solid 25 points right now. You were down more than 40 points in the S&P at those lows just as we came into the weekly jobless claims number at 8:30 this morning. And we jump around to some of the FANG stocks as we kick things off. You got Apple shares catching a bid on the open. You were pushing 133 and change. We were just trading at 131 on Apple. We jump over to Amazon. Amazon shares down about 0.75% right now. We jump to Microsoft, down about 0.75% for Microsoft shares. See how Meta catching a little bit of a bid. There you go. Meta up 0.5% this morning. Netflix ahead of their numbers after the bell, down about 1.3%. Amazon, Disney down about 1% right now as well. We jump over to Google. Google catching a bid, up about 0.75%. All right, what else we got pulled up here? Yeah, this one talking about currencies, talking about the ECB. So the minutes from the recent meeting at the ECB, what are we doing? Had a large number of ECB officials backing a bigger December hike as they are on pace for their hiking cycle to accelerate. The account of the meeting also showed some wanted a faster pace of quantitative tightening and softer inflation, though, raising the questions over their tightening path over in Europe. But quote-unquote, a large number of officials initially preferred 75 rather than the half-point move proposed by Philip Lane. Some ultimately agreed to a smaller step, accompanied by a public pledge by Lagarde for more increases of that size the following meeting. You talk about their path in terms of where they're going. And talking about what the analysts are talking about there, the latest economic news and recent remarks of policymakers suggest it's becoming more likely the 50 basis point hike in February is going to be followed by another one in March. A large number of members initially expect a preference for that 75 hike as inflation was clearly expected to be too high for too long. Yeah, but some of the members nonetheless expressed their willingness to agree to that 50-point hike. So probably not backing down from that hike. So that's where you get the weight on the dollar, right? Because what do you have? You have Europe and the euro releasing their minutes, and they're talking about being more hawkish than they have been. You see how this market gets so forward-looking. Now, you talk about forward-looking, man, then what is going on with the 10-year if you're that forward-looking and you have the 10-year right now trading from 108 in October, from a price of 109 in November, and a price with a handle of a 111 as recently as like 3 weeks ago, and you're pushing 116 right now on the 10-year, and that is pushing the yield away there yet. Yeah, we got a 3.3 handle, 3.39%, the yield on the 10-year. Remarkable, okay, when you look at where we are. I'm going to pull it up in terms of the yield curve, okay? Because it's pretty remarkable. You push things out to the 10-year, and there you are, 3.39%, right? When you're over 4% on the 2-year, And you're at 4.7% almost on the 1 year, right? Remarkable when you look at those short-term rates and then you add up to the 10-year. What is the market? What is the bond market, okay, looking at 1 to 2 years down the line? What are they looking at 2 to 3 years down the line? They're pricing in that all these slowdowns potentially, folks, are going to catch up, okay? They're pricing in the decline in retail sales, et cetera. Quite a pop. We'll see if it holds. You've broken out of this channel line that the 10-year's been in, and, 30-year, quite a move as well, from 117 at the lows and recently trading at 124. You're up almost 8 full points in that 30-year. Pretty remarkable. All right, what else are we going to check out? Let's check out some of the airlines. They've been on quite a run recently, but they're giving up some of that today. You got American off 2% right now, and that's quite from the drop it had yesterday. Delta Airlines negative by 1.5% right now. Southwest shares off about 0.4. JetBlue off about 1.3% right now. Yeah, these, checking out the cannabis stocks, man, stay away from these for right now, folks. That industry is just on a path to zero margins. Just prices dropping dramatically in every market. And it makes sense when many times it's a plant that many people can grow. New York just went live with recreational. I read a story a month back that they had something like just massive amounts of cannabis that had been accumulating. The flower, that does go bad. It's a perishable product. When you talk about the flower, the edibles, not so much, but the flower in particular, the cannabis buds, and they have so much of it. And that's happening across the board, folks, as margins, just price competition. One thing where prices have come down, yeah, cannabis prices across the board. And man, you talk about their stock prices. Let's go back for all. I mean, look at that. Just remarkable. You got a double top. You trade down to COVID lows of $9. You push all the way back up to that level, and it's been a one-way trip for Canopy, man. Now, if you do want any exposure, folks, one way to get it is potentially Constellation Brands. They've held up pretty well, you see, from where we are. I mean, volatility last year, but you're right near the bottom of this range that this thing's been in, basically since December of 2020. So the last 2 years, you're talking about near about that low 215 or so, 212 maybe, the bottom of that consolidation. Maybe call it 210. You're trading at 220. And listen, beer, wine, not going away. They have quite a portfolio. And really, I don't even have any Constellation Brands at all, folks, but they do have quite a portfolio, whether it's Corona, Modelo, Kim Crawford wines, and then they have exposure to Canopy. If you think there's any value there, much better way to get it in there. Yeah, talk about a very small barrier to entry. I mean, if you're unfamiliar in Massachusetts, folks, I have friends up in Massachusetts. You're allowed to grow plants in Massachusetts when it's recreational. If it's recreational, if the state has made the decree to make it recreational, you should be able to grow it, man, period. Because it's a plant. How do you make a plant something that's recreational? And then you say you got to pay everybody up the wazoo to be able to do it. Okay, I understand it. That's part of the reason why they're legalizing it, only because they're getting the tax revenue that comes with it. All right. But for those in Massachusetts, you can just grow it. I think it's 2 or 3 plants per an adult. So if you're in a 2-adult hold house, you can have like 4 or 6 plants, which just is a massive amount of cannabis for recreational use. But in Florida, it's medicinal. The line is merged dramatically because you can go into any physician licensed to give you cannabis to write a script for it. And here's what happens in Florida too, is that to be a physician that writes cannabis prescriptions, you have to take some type of class, I think, okay? And then that is something you're able to do. You don't have to be specialized in any type of cannabis physician field, okay? You have to take a class and you can do it. So many different physicians can do that. And then you have businesses that set it up, and you can go in with many different ailments, folks, okay? Anxiety, depression, many things. So anybody really can go in and say they have anxiety and get it. But where is the barrier? It's just basically a tax on the rich. I've said it before, it is not fair when you are locking people up that just can't afford to pay for the right to smoke cannabis under a medicinal label. It shouldn't be legal the way it's set up, folks, because it's literally just a tax under the guise of a medical prescription. You got to renew, I think it's like, and looking these up because you got to see the access to the field and the market you're in, okay? And it's just a way to send money to the doctors, number one, because I think you got to go to them every like 9 months for a resubscription. They get $100 to $200 every 9 months, and then you got to pay the state, of course, for that little card, which is $100 a year or something like that. Stay tuned, folks. We'll cover something else when we get back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&Ps down about 29 points. There's the drop-off. Happens at about 9:40 in the morning. We've been trading lower for about the last 15 minutes or so. You're trading at 39.15 right now with the S&Ps off about 0.75%. You get the NASDAQ 100 off a full percent right now. Market sliding lower. You jump over to crude. We got quite a run yesterday to 78.50. Today, we're back above $80 at 80.10. You jump to that gold contract right now. Gold up about $10. So the reason talking about the debt limit, right? One more time, why not? Because today is the day the outstanding debt is set to hit its statutory limit. That was a letter that Secretary of the Treasury Yellen wrote to Speaker of the House Kevin McCarthy. The debt limit is the total amount of money that we can borrow, okay? Now, the Treasury Department cannot provide an estimate of how long the government can expect to pay the government's obligations through extraordinary measures, but it is unlikely that that cash will be exhausted before early June. The reason why I bring that up, folks, is because this is going to rage for the next 5 months till June. And then it might even rage after that. And I mean, this article is talking about what it could mean for Social Security and Medicare. That's not even the important part. I just want to get into the details of the facts because hopefully all of you understand that everything could be impacted if we don't allow ourselves to raise how much money we need to pay our bills. Obviously, that's going to impact any type of government program. How it impacts them, probably going to vary and probably going to get political in that aspect as well. Yeah, nonetheless, we leave it there for right now. What else do I have pulled up? One more time. Yeah, so you got Federal Reserve Bank of Boston President Susan Collins, not a voting member, okay, but talking about now that rates are restrictive territory, we may, based on current indicators, be nearing a peak. I believe it's appropriate to have shifted from the initial expeditious pace to tightening to a slower pace. I mean, keep in mind, folks, okay, they just hiked by 0.5 point last month to 4.25 to 4.5. They had 4 straight 75 basis point moves. Here's what I'll say. They're probably going to go 25 with where the data's lined up next meeting. They're probably going to go 25 in March as well. May's where it gets interesting, man. Thanks for starting your day with me, folks. Stay tuned. Basil did a show at 8 a.m. That's coming up right now. We got live programming after that. Larry Pesavento, Steve Rhodes, Dave White, Tom O'Brien this afternoon. Have a great one, everybody.